I thought it's such a piece of trash. What a stupid idea. And it did a ton. I'm going to go to every beach on earth. I just want to go to every beach on earth. And I did. It took me 3 years. And at the end of it, I was bored out of my fucking mind. I mean, I just said, this sucks. The industry that mines Bitcoin specifically needs to find a voice to talk about the things they do that actually help build sustainability into energy.
I've seen you multiple times riding your bicycle. We've gone to dinner. You've ridden the Mr. Wonderful bike there.
Yeah.
Did you recover it? Somebody stole it?
So it got stolen in a big operation. They stole over 100 bikes that night and Vespas.
So this was not a targeted crime.
I found out later. And I offered a $25,000 reward, not for the bike. You know, I wanted to catch the guy that did it. So they're an organized crime organization, and they put it in a truck, and they put the truck on a barge in the river, and they took maybe 250 bikes that night off the streets of Miami.
And what do they do with them?
They apparently sell them. They take them offshore. They put it on a ship, and just. So my Mr. Wonderful is in some South American country right now. And Vivolo, the bike company that made it for me, saw it on social media and said, let's do another one even crazier. So I was there last week designing the craziest Miami bike you've ever seen. It's pink, it's red, it's black.
You don't have it though.
It's going to, when you see it, I'm going to be Mr. Wonderful a la Miami.
All right. I feel like you've done a great job. Shark Tank, all the social media, CNBC, et cetera. You built this massive audience.
Yeah.
How do you think about that stuff versus like the investing activity? Do you still spend a lot of time investing, or is it more so now you've got the investments you've made those investments, and now it's more of the media focus and kind of the content?
I think a new model is emerging, and you're actually part of this new model. And let me explain the way I see it over the last 24 months. So let's take a company that is trading, MindMed. When I got approached with that company here in Miami at the Soho Club, second floor, it was a bunch of crypto guys 3 years ago. One guy there named J.R. Rand said, look, I'm a Kryptonian. However, I also have a great interest in psychedelics as medicine. And I said, you're crazy. Those are illegal drugs. LSD is illegal. Schedule I narcotics, same as cannabis, psilocybin, all of this stuff. He said, no, I'm going to go to the FDA, form a company, and do clinical trials. There's no recreational use of this. And, I want $3 million. And I said, it's too crazy, but my guy Alex, who runs all their adventures, he's got a team. We'll do due diligence on it. It's intriguing enough. That was 3 years ago. Alex worked on it for about 2 months, and he really went to town on it and did a lot of research with his guys. And the way my deal with Alex works, to give you an idea of how this works, so I probably told you this.
I already know, but go ahead.
Okay, so when we do an investment, I'm the bank. I lend him 15%, so his what's are on the line. He borrows the money from me and he invests beside me. He gets his own stock, but he owes me the dough, 15%, so that I know our interests are aligned. This is the first time in history on MindMed where he came back to me and said, I'm taking your 15% and I'm tripling it with my own dough. And I went, what? Why? And he laid out his case. We ended up investing. That went from a 20 million valuation that we bought in at to now 1.7 billion. So it's my biggest winner in years. But those are the kind of investments. And how did that story happen? This is where social media intersected with the story of MindMed. It got into the Rolling Stone. It was in, all the news magazines. It was in the popular press. It was all over social media because I was talking about it along with all the other advocates. Mm-hmm. And the story built into a giant company that has over 300,000 shareholders. So my new model, Pomp, is this. You want me to get involved in your business, all right? I want a proprietary position. I don't care what your last round was at. I want to be a founder. So you're going to give up some stock. But then I'm going to turn on my machine. And if you have a story of merit, I will explain it to other shareholders, and hopefully we'll build this business together using all the tools the new world has. Shows like this, social media, Yahoo Finance, Benzinga, CNBC, CNN, ABC. That's how companies get to be known, not just for shareholders to tell their product story. Why should you care about microdosing LSD? Because it works, or at least it potentially can, and it's going through clinical trials. And it can solve for addiction, opioid addiction, anxiety, alcoholism, all these things.
Is there a specific type of company that this works for more so than other types of companies? Like, does it have to have some inherent story behind it and some interest? And that's really what you're trying to underwrite just as much as the actual investment itself?
It's a great question, but the truth is every company has to be able to tell their story in the best light. I don't care if it's really sophisticated technology. I mean, it's much better when it's a consumer good or service, but right now, the reason crypto is of such interest globally is the story was told by guys like you for years. And it slowly emerged as a story of, store of wealth, if you want to call it that, or currency, if you want to call it that, whatever it was. It's the fact that investing has become democratized by the Robin Hoods, by the Reddit crowd, by all the news channels, by the cable channels. Business is part of everyday news every day. And so if you can get a following that is interested in your investment philosophy, I invest sustainably, ethically. That's what I do. That's where I came from. That's all I do. And people that are interested in that follow. They don't have to invest with me. They can bet against me, but at least they hear these companies' stories. So my argument is that the value I have to a company now is the ability to take its story and blow it up. And then investors will make their own individual decisions. But that's very hard to get to that place, and it's taken me a long time, as it has taken you, and I want to use that power wisely.
When you think about public markets versus private markets, how much of this is better suited for public markets where there's liquid stock price, there's shareholders, people can make decisions every day to buy, sell, hold, whatever, versus the private market where there's not so much access for some investors, right? There's not that liquid kind of daily stock price. And maybe the impact is more around like helping the business build in terms of getting customers or driving, consumers to check it out or whatever. Is it either or can this work across both public and private markets?
It's both. And the most powerful platform to tie these together is equity, crowdfunding now, where you can tell a consumer of a product or service that you can become a shareholder at the same time. I'm very intrigued by that. I have a relationship with Start Engine now, one of the largest crowdfunding platforms in the world. So when a company has 100,000 customers that have tried its product, it's still private, we can go to the customers and say, look, you love our product, you love our service. Now we're going public, you can buy our shares. You can buy them online. You can put $200 or $2,000 or $20,000 into the company that you've been supporting now for 5 years. And this is again another digital, crossroads of equity and funding and debt to the consumer, which doesn't have the same issue around timing like a private equity firm does or a venture capital firm where after 7 years they turn into a pumpkin and they want a pref share and they want this and they want all these special rights. I'm not into that anymore. I'd rather you want to raise 50 million? Let's do it in equity crowdfunding where everybody owns the same share, all the interests are aligned, there's no time bomb. People can buy and sell their stock anytime they want. And so for me, it again goes to the platform. What I try and do with my companies that are private is get them customer acquisition costs, get theirs down. And I use my platforms to talk about their products and services. I try to get people to try the products. But, at the end of the day, I feel a responsibility. I don't endorse products I don't use personally. I think that's bullshit. And I think people can smell bullshit a mile away. So I never do that. I do things that I use, I like, or I invest in, and I tell my story. And you can either agree or disagree. But at least I get that mega bullhorn to get out there and talk about it.
Yeah. When you think about your career building up the media side, there's a lot of people who listen who they're very interested in this, and more so founders are interested in this as well. So one of the big secrets in venture capital right now is almost on a daily basis, I have a founder that comes to me and says, how do I build my Twitter following? How do I build Facebook? How do I build Instagram? Should I create an email newsletter? Like, what should I do so that I have the same power? Maybe it's at a smaller scale, but I can talk directly to an audience that's in my vertical or in my industry. And I think that there's a lot of kind of value that can accrue there. What are the things that you did that you're like, these were the big inflection points, right? Obviously Shark Tank probably was a big one, but are there other things that you're like, this is how I built this massive platform and kind of made a name for yourself where people were willing to at least listen and hear you out?
What I found worked as these, it's a complex question because I get the same question all the time. How can I get 1 million followers? Well, it's not that easy. I mean, there's people that try and sell you services to do it. There's all kinds of consultants that try and do it for you. They want you to pay them $15,000 a month. All that stuff happens. But the truth is that social media is the great democratizer of people that are good storytellers. Because if you have interesting information that may assist somebody or they may find interesting, they will tell another about it. They will send that link to somebody else. And that that organic growth occurred pretty quickly for me. It started, 50,000, 100,000, 200,000, then a million, and then another million. And I never changed. I mean, I like to have fun on social media. I'll play guitar with my pajamas on Saturday. I'm happy to do that. People play guitar like to do that. Just share it. I talk about stocks. I talk about bonds. I get very, very serious about issues around politics. I just lay it out there, and it's all true, and I don't bullshit. And I think that's what worked for me. But I'm very happy to be in different verticals. I can talk about watches with anybody in the world now. I have a massive watch collection. I used to be a shareholder in Fender. I can play guitar. I have Chef Wonderful is a multi-million-dollar business now. My wine business is now the largest direct-to-consumer in the country.
Really?
Yeah. We just did 5.1 million in 20 hours on QVC last week. That's an all-time record. So these are different verticals that interest me, and there's different constituents that come into your universe around those interests. I got a huge following of people that like wine.
Tell me more about the wine business. I don't know anything about this.
Yeah, so here's something interesting that I learned. I grew up with a Swiss stepfather who's really taught me in my teenage years how to, the difference between Bordeaux and Burgundy and DRC and the Italian wines and all the varietals, and I became interested. And over in Europe, wine is just part of family. It's not about getting drunk over there. They just drink it, maybe one glass or two glasses. It's not a big deal. So kids drink it watered down, whatever. And so I became pretty proficient at the different varietals. I always was interested in why, I'm a collector of wine and an investor. I buy wine futures with a group in Boston. We invest millions of dollars in wine, and we try and guess which varietals. Like this year's going to be terrible because it snowed just last week in France. It actually snowed. It's unprecedented. And the point is, when you get knowledgeable about it, you get kind of sucked into that lifestyle. So I started a wine business in California where I blended it and I sold it. And I was losing money like everybody else, like a lot of money. Everybody goes into it romantically. An old joke, if you want to be a millionaire, start as a billionaire in the wine business because you lose a ton of money. And then I met this woman through Shark Tank named Annette Alvarez. She was the wine buyer for Costco. The largest buyer of wine in the world is Costco. People don't understand that. All the global wines, they are the largest seller of wines as well. I was trying to sell her a Shark Tank deal of single-serve wines. Nobody could ever reach her. She was impossible to get to. And I asked one of the guys in my office to go to the dark web and hack her cell number, which I had in 10 minutes. And I called it. And I left a message. And I said, listen, I'm the guy on Shark Tank. If you were a Shark Tank fan, I don't know. You saw that deal last night, a single-serve wine deal Cuban and I went into, and I'd love you at Costco to
this is the Cupola wine or whatever?
It was. And there was another one called Zips as well. And so I left the message, and I thought, well, maybe she'll call me back. 10 minutes later, I was up at our lake house. The phone rang. It said, this is Annette Alvarez. I got your message. You were rude to Barbara last night on Shark Tank. I went, what? What? She said, no, you were really rude to her. And I said, I got to tell you something, Annette. The only reason Barbara gets to Shark Tank on time is I buy her a new broom every year. And she didn't think that was a funny joke. But
so you're 0 for 2 with Annette Alvarez.
I know. I thought she'd like that, but she didn't. And anyways, we got into a conversation. She said, I'm on my way to Hawaii for our annual holiday with my husband. I'll be at John Wayne Airport at 1 o'clock on Saturday. It was Thursday night. And if you want to fly here to meet me, you can bring your wife because I want to meet your wife too. I said, why? She said, I just do. And I want to see a real person. And I said, Linda, we're going to John Wayne. And we flew there. I got an hour of her time, and she told me this. She said, look, you want to sell wine with me? I'm the largest buyer on earth. The only reason you get this hour with me is I'm a huge Shark Tank fan. I have some questions about the show. I'd like to meet you. It's great. But here's what you need to know about the wine business. 97% of wine sold in America is sold for under $14 a bottle. 97%. People don't understand that. That's all of the wine, Pomp. That's basically the stuff you buy for $60, you're in the 3%. In order for you to make money, you're going to have to be able to ship me 150,000 cases a day. If I order a cab from you, I need 150,000 cases. That's just my stocking order. The next day, I need another 100,000. You can't do that. You don't have the capabilities. You don't have the logistics. You can't even understand how much juice that is. If you want to pull that off, I'm going to give you the name of a guy named Pat Roney. He owns 19 vineyards, and he makes our Kirkland wine. He is our logistics guy. He can ship me 2 million cases. You form a wine company with him, you go 50-50 partnership, then I know you have the logistics skills then I'll give you an order, and it'll blow your socks off how much wine we can buy from you. I go to see Pat, and Pat says, I know you're coming. Annette called me. We're interested. Let's form a relationship. We fought for 6 months on the terms of it. It ended up being 50-50. It has been wildly successful because she was right. The minute we dropped our price point between 11 and 14, we started selling, hundreds of thousands of cases. Mm-hmm. And last week I broke a record, never been done before on QVC. We sold $5.125 million worth of wine in 21 hours. That means we have to ship 250,000 cases in 2 days. We can do it. But that's a business that's very profitable now. Mm-hmm. In fact, a SPAC took over that company. I'm now a shareholder in Vintage Wine Estates, and it's going to trade on the NASDAQ June 6th.
Wow.
Yeah.
And so you also do direct to consumer as well, or it's just
absolutely
all
launching
Costco?
A new site. It'll be announced next week, so I'm a little early on it here, called Shop Mr. Wonderful, and it's going to have not only all my wines but all my Shark Tank products. So a massive play direct to consumer as a result of the pandemic, organized by a great digital team. A lot of work going into this. It's like extending the voice, Pomp, as we talked about at the beginning of the show. Mm-hmm. What do I do with this voice? These are products I invested in. I use wines I make. My wife blends the whites. I do the reds. This is our family stuff. Try it. It's an honest pitch. Mm-hmm. If you don't like the wines, ship it back. I mean, you can send it back if you want. But when it comes to wine, I've got your back. Nobody makes wine like I do.
Yeah. Crypto. I think when we first met 3 years ago, maybe now.
Yeah.
CNBC set. I didn't know very much about you other than this guy on Shark Tank.
Yeah.
I don't think you knew anything about me. And I told you I had 50% of my net worth in Bitcoin.
I thought you were fucking crazy.
And that's a nice way of putting it, because I think on the segment what you said was, I forbid you from, I forbid you.
I remember we were on the set of Squawk Box,
yes.
And I thought, who is this idiot?
Yes.
Why would he put so much into one thing?
And you didn't realize that I think I was playing a game with you and you were playing a game with me, because right before the segment started, they were at commercial. And we were all talking or whatever. Yeah. And I was kind of jabbing you a little bit, trying to get you to be excited. And then you said to me right before it started, how much do you have in this? I said 50%. The lights and cameras turn on, and that was the first thing you fired across.
Well, I mean, that was then. But in 2017, I had nibbled in. I'd start buying some Bitcoin and some Ethereum at that time, and a couple of other, I think the US, I can't remember when I bought my stable coins, but you know what happened to me? Because I'm in a highly regulated industry with all my indexing and all these financial services companies that I'm invested in. So I'm really regulated by the regulators. And I started talking about crypto, and whoa, what a negative response back then. You remember, it was
especially 2018 when it had dropped from 20,000 Bitcoin price to $3,200.
So I got my wings clipped pretty hard by lawyers in Washington saying, you got to stop. I mean, you're a heavily regulated guy, and you're out there on TV talking about Bitcoin. Forget it.
Well, and you talk about it as much as you want or not, but I think a lot of people think Elon tweets something, or there's somebody who is really bullish who all of a sudden is a little bit more bearish, and they call it the tap on the shoulder, right? The hey, knock it off type thing.
Yeah.
Is that goes through the back door conversations and somebody just says, hey, you should chill with that? Or is that something that is kind of more stated, right? In terms of
the way it works is I have to be compliant as per the compliance officers that work in these companies. Mm-hmm. Every single word I say, including this podcast, is going to be reviewed by compliance. Mm-hmm. And these are organizations I have to be compliant with, because they have to be, they're telling the regulators that we are compliant, and they have to make sure that's their job.
Yep.
And so I started getting calls from lots of them in different companies saying, you're way offside and you've got to stop. And I did. And what happened though, it was only 8 months ago when the Swiss regulator, the French regulator, the German, the New Zealand, Britain, Switzerland, and Canada, they started putting ETFs out. The regulators had gone 360 or 180, whatever you call it, right? And I said, well, wait a second. I'm an investor in those jurisdictions. I have investments in all those jurisdictions. I'm a global investor. I have investments in all those currencies. I am going to buy some Bitcoin as I can in those jurisdictions. We don't have it here yet the same way, but it's coming, I would assume. Mm-hmm. And obviously the regulators have lifted their curtain, or made it easier to do that. And so I started growing my position to 3% I'm a 5 in the operating company. So we have 5% in gold, for example. I said, let's go crypto to 3. And we started buying coins, and we started buying Ether, and we started, investing in a few other things. And then I started getting calls, and I think I've talked to you about this. I service institutional clients and sovereign funds. And they saw me on CNBC talking about my 3% weighting, and the phone lit up. It went nuts. And what was it about? It was about ESG. It was about this issue around sustainability and saying, where'd your coin come from? I bet they were mined in China. I said, well, who cares? It's all fungible coin. Bitcoin's a Bitcoin. It's awarded. It's a coin. They said, well, you're supporting coal burning miners. This issue I predicted would explode, and I think I've been right on that thing, but it hasn't changed my interest in going long Bitcoin for a bunch of reasons, because I've gotten a lot more sophisticated now. What interests me the most right now is DeFi. I think it's where the puck is going, and I'll tell you why. So now I've got a large amount of capital tied up. 3% weighting in the operating company is a lot of capital, and it's not yielding anything, right? So I said to my guys, let's get into some DeFi and take a portion of the assets and wrap it into the Ethereum chain, and let's start making some interest. Let's start looking at different ways that we can loan our assets out and start making 4, 5, 6, 7, 8. You and I have talked about this. I have gotten way down that rabbit hole, and I'm way deep into that now.
Let's stop for a second just so people understand where we are. So you got 3% of operating company being assets, right? Yeah. In crypto, you've got 5% in gold. First question is, why still 5% gold, 3% crypto? I think a lot of people who've kind of gone down the rabbit hole of crypto either invert that, right? So it's 5% crypto, 3% gold, or like literally have gotten rid of the gold. So why still have more gold than crypto right now?
That it's a great question. And we've had that discussion internally. We do our meetings every Monday at 10 o'clock. We review the portfolio changes, et cetera. I know there's going to be a change there soon because it comes up every Monday now.
Okay.
Because we can't make any interest off gold, and we now are starting to get yield and starting to make money. And the weird thing, as you well know, we've had tremendous volatility on Bitcoin this last 10 days. That actually enhances DeFi. It makes it better. I'm making way more on my contracts now. Mm-hmm. And so, I said to the guys, look, and this is, Brad, I haven't even told anybody this story. It's just unique. It's on your podcast because it's so new.
You only bring me the good stories.
Well, we talk about a lot of stuff. So I said to the guys on my crypto team, look, this DeFi stuff is really complicated. It is not easy. We've got the MetaMask format. We've got all of these other platforms, all the stuff we have to do, these contracts. This is crazy complicated. But there must be millions of people that have a little bit of coin that want to make some 4, 5, 6% on it. Why don't you go find me a company, a team that I can invest in that will do a commercialized DeFi, and I mean not corporate, so that somebody that has a wallet that's got maybe 20 grand or 10 or $5,000 in it could easily do what I'm doing. That takes a staff of 4 people.
You're basically talking about more user-friendly, better user experience, an easy way. Hey, I want to do this. And rather than me actually have to go in and do it myself, I can use this service to accomplish this.
Yeah. And so they came up with this team. Again, it's in a different jurisdiction because it's Canada, which is very open these days. A Vancouver team that one of my crypto guys introduced me to. Ben is the... and he's got a great, almost 20 people there doing this, that they're all ex-bankers. They understand the whole format. They're deep into the algorithms and all the code they're writing. And they said, look, we're looking to raise some money here. Do you want to be an investor? And I said, yeah, I'll take this on. But I want to buy a third of the company. I want to be a significant shareholder. And we negotiated for a while because you're going to do 2 things for me. I'm going to help your company, but I'm going to give you a ton of capital. And you're going to manage it according to the way I want to manage it. And you're going to produce things that I want because I know if I want them, others are going to want them, like tax returns. I want to press a button and get a tax return. I want to be compliant, right? Nobody does that yet. I don't want to have to sit there with an accountant and figure out all my trades. I want it automatically produced. He's working on that. His team is working on that. So we put a significant round together for them, a $20 million round. I'm the lead on that thing, and I think it's going to be a great company. We haven't even announced it yet. It's called DeFi Ventures. I'm going to rename it to WonderFi because it's going to be my vehicle. And I think it's just the beginning, some great things to come. And
so when you go into DeFi, what exactly are you guys doing? You're taking Bitcoin that you own and Ether and earning
Here's what
interest?
I want, Pomp, okay? I'm an investor. So there must be many other investors like me. I've made my decision to 3 to 5% allocation. Probably as you snuck out of me, I'm going to be moving it up because you're right. Gold's not doing anything for me. And
3 plus 5 is 8, not 5.
Well,
you could get rid of all the gold.
It could get to 10. It could get to 10. All right. But we're bound by certain covenants just in how we manage the operating company.
10, I feel like, is on the upper bound of most conservative investors, right? So it still fits within the kind of bands, if you will. If you're a conservative investor, most of your focus is outside of crypto.
Yeah.
1 to 10% is kind of the band.
10's up there, Paul.
5%
for an institutional investor. 10 is up there.
Yeah, of course.
Right now, that number for the big guys is 3%. They're happy and they want Bitcoin. They haven't gotten past that yet. Bitcoin is the property, the digital asset they want, and they want
it's a store of value.
Store of value, and you've been right on that. Can't deny that. Okay, it's a volatile.
Whoa, we might have to roll the tape back.
You may have to erase that. But my whole point is it has inherent volatility. But imagine. So here's my thoughts about DeFi. Okay, I've got the vol. I know I'm going to be up and down 38% a year. That's what it's been historically, right? So we're seeing that. We've had a crazy vol right here.
We're literally recording this on a day that it's been down 40% in a month.
Okay, so let's say in my case, my DeFi company, of which I'm a large shareholder now, I say to the guys, look, let's put a bunch of crypto on our balance sheet. All right, I'm going to own a third of that balance sheet or whatever I own of the balance sheet. I want you to loan that out and get me between a 4.5% and an 8% yield. Now, of course, I have to market the change in value because it's going up and down, but I'm kind of agnostic because I'm owning it as property. I don't really care because it's an allocation. Let's say it's 5%. It's going to stay at 5. I'll change it every quarter, adding or taking away from it, but I want you to loan it out there. So the whole operation, the DeFi operation, is to start doing these contracts for me on an AI basis. So it can go look to the market, see what the spreads are on all these different opportunities. I don't want to get too complicated with it.
It's basically yield farming. What you guys are going to do is yield farming.
And then others that are interested, like I am, on taking their asset, and imagine if I could have, over these years, had a 5% yield on my gold. That would have been incredible. Well, I can on my crypto. So that's really what I'm doing in DeFi. And I think I've got the best team in North America. Everybody says that, but I'm backing this team because I've done a lot of due diligence on them. And I think, in the next few months, that will become part of our portfolio with a yield metric to it. So,
because what you're basically saying is you're going to keep the assets denominated in the asset, right? Yeah. So let's say, just for easy things, you have 100 ETH. You put that in, you want 8%. So now you're going to end the year with 108 ETH.
Staying in ETH.
Regardless of did the price go up or down.
I might go back to fiat to just pay some expenses, but I'm going to stay in ETH on that balance sheet. And you as a shareholder, go with me in the share price as my assets grow.
Do you think that, because this is a really important piece that I think the traditional world hasn't woken up to yet, sounds like you're now getting there, is once you leave fiat into crypto, you don't go back.
I don't want to go back.
Okay.
Why would I?
Well, I don't know. You tell me. How do you think about it, right? So you've got 100% of your assets. You've said, I'm going to take 3, I'm going to put it into crypto.
Yeah.
Maybe that goes up, maybe it doesn't, whatever. But let's just say it's 3 to 5%, whatever the allocation is. Once you put that into crypto, why are you not going back into fiat?
Well, the reason I would come back out, let's say our covenant is a max on 10, which is most institutions, that is max arena.
Okay. All right. So 10 is the max allocation in crypto.
Because if you're going, you basically, if you have LPs or you have other shareholders or you have other constituents, you've told them you have a covenant of diversification and it might be 10%, whatever it is. But it's not much higher than that. So when you get to 12% at the end of a quarter in your crypto, you're going to trim back to fiat. You're going to go back to 10%. Or maybe, and then you just sit in the weeds waiting for correction and you buy back up to 10%. I've been buying.
You bought the dip.
Well, it's not really a dip. It's maintaining the 3% weighting, right?
Yeah. No, but I'm saying the dip in the price.
Yeah, I know. But to me, it's okay. We're 2.4 and we said we're at 3. Buy up to 3. Because we've had a correction. You can't call that's a correction. We just had.
Well, I mean, look, in 2017, there was 6 over 30%, I think, right? There was 240% drawdown. So it doesn't feel good, right? When the asset draws down, but it's not atypical for the kind of historical bull runs,
right?
Which Again, if you tell in the traditional world, hey, there's going to be 40% drawdowns, but you're going to go up 20x in a year, they're like, I'm out.
Well,
right?
They're like
I'm out of this.
but in this case, you end up with more coin after that correction. And then you're out loaning it out and you're getting and with that volatility, you just got 200 basis points more yield. People don't understand vol is good for yield. It's not good for your stomach.
Yep.
But it actually helps you mine yield from your crypto. And so when you understand those smart contracts and how it's being loaned out, and I'm getting way more sophisticated. So I look at it now with my team saying, okay, you could even put leverage on this if you want, which we don't. But I think that's a crazy chicken move. But you could really goose your yields.
Why are you only targeting 4.5 to 8%? Some of these can pay 20% or 30%.
What's your duration? What duration?
Well, that's what I'm asking you, right? Is it just you're saying, hey, I want to be able to earn the 4.5 to 8% forever, and the 20 to 30% is only there for a couple of weeks or a couple of months? Like, how do you think about yield versus duration?
So what we don't have is a long history of what that curve on duration looks like. You just don't have it. We're all pioneers in this. And because I'm a bond guy, I've been a bond guy for decades. And so what I look at is duration and quality. You can't work with that yet. We don't know. So I said, look, let's keep our contracts short. Let's understand the change in the deltas. Let's understand, how inefficient the market is when there's a lot of volatility. Let's just gather our own data. Keep our powder dry. Let's only loan out 50% of our positions until we understand how it works. And I should also disclose I'm working with some of the larger corporate DeFi guys. I've opened accounts to manage some of my company's balance sheets. I'm putting up to 5% of our fiat currency into a strategy like this on our balance sheets. I don't talk about that too much, but I'm letting you know. I'm saying, guys, we're in, let's have an operating company that's sitting with, $30 million in cash. Let's put $1.5 million into this strategy. We'll open an account. You'll understand how it works. You're the treasury. Let me show you how it works, how I'm doing it. Let's disclose to, if they're private, we just have to disclose to our LPs what we're doing. I haven't anybody said to me, no, I don't want that. Everybody wants to learn. So instead of making nothing on our cash, which we're basically under inflation, we're losing money on our cash, we're picking up, we're doing better than 4.5. That was a few weeks ago when coin was very stable. Now, like today, you can get 7, 8, 9, as you know. So it's not impossible. And so I think it's
why only put 5% of the company's assets? Why not do more if it's just yield? You're not taking the price risk necessarily in terms of that's the goal.
Because the compliance departments are all in that, let's tiptoe in. You know the concern. It really is a 3% number right now. There are some at 5%. But here's the thing that everybody should understand, because I live in this world. The potential is huge. You've got less than 1% of global corporations even thinking about crypto right now. So as time passes and they see examples of what I'm doing and others are doing, and they start to tiptoe in, you're talking about billions of dollars that are sitting on balance sheets making nothing. And so it's going to become, that's good and bad news, because the more money goes into that, the less yield you're going to be making. There's going to be a lot of competition. And so, but right now I'm tiptoeing through the tulips, almost double-digit yields. I think it comes down commensurate with the volatility. So here's the thing you understand. I don't want to get too complicated, but let's say when you put a lot of Bitcoin on your balance sheet, you're going to have vol. You're going to have volatility. The criticism of Tesla, we've been watching. They showed on CNBC today all the balance sheets that have, crypto on it, they're all down because people think, oh, woe is me. They've got crypto. It's going to affect their balance sheet. It does, but at the same time, they're loaning it out if they're smart, and they're bringing in yield that they never used to make on their cash. So over time, when people understand this, it'll offset it.
I think people, when they hear this, are going to be very surprised to hear that you're buying the dip, you're getting into DeFi, you're earning yield, right? Those are various fairly sophisticated strategies compared to just buy Bitcoin, right? Or, hey, I want to buy a mining stock, for example. Because you're getting more and more in the weeds, right? And I feel over the last 2 years, maybe it went from, hey, I probably shouldn't talk that much about this, to, okay, maybe there's something interesting, to 3%. Now, hey, let's start going further and further into the weeds. Where does this go 10 years from now? If you just fast forward and you say, okay, hold on a second. There's a bunch of stuff that has to get built and get there. Eventually, is it just 100% of corporate balance sheets are, in digital assets? And so there's digital dollars, but also Bitcoin, Ether, whatever. There's yield. There's a true decentralized financial system that gets built here, kind of right out underneath of Wall Street. Or is there coexistence? Or where are we going, I guess?
I guess what's happening is the money is looking for the most frictionless way to actually be productive. And so the reason DeFi is so interesting, instead of paying those crazy 200 basis to 2% fees that these wallets are charging, I don't need those guys for anything. Maybe I need a ramp to put my fiat into Ether or whatever, but after that, I don't need them. And I can go and do this for a fraction of those costs on a decentralized basis. What got me into this was we're always trying to find a place for our cash. Like when we haven't found an investment, we want some kind of yield on our cash. And right now we have a lot of cash because we sold a lot of commercial real estate just before the pandemic and during it, because I'm worried about what happens to all that office tower space. I'm not sure everybody's coming back the way they think. So one of the guys that works with Alex that runs O'Leary Ventures was one of our interns, heavy crypto. Eric's his name. I'm not going to tell you his second name so nobody bugs him, but he came to me and said, listen, you got a ton of cash here. Why don't we start a fund, a structured product that does exactly what we've been talking about? And I said, why is it going to be structured product? He said, because in the jurisdiction we're going to put the fund where you're going to invest the cash, they allow this. We don't allow it here in the U.S. yet, but there's other jurisdictions like Switzerland and everywhere else. And you just report your gains to the IRS like you should any other asset. And he worked on it. He went way down the rabbit hole on it. And he's still working on it. It may still come to pass. But in the meantime, I said to him, Eric, why don't you and Alice go find me a company that's doing this already? I don't need to have a fund. I got the cash. Let's just buy the company and put our cash on the balance sheet. If we're a large enough shareholder, we won't care. And which is what we did. And so he found the company. He introduced me to these guys in Vancouver, DeFi Ventures. And I met the CEO and the whole team, and I went, wow. And I showed other investors the team and said, hey, guys, do you want to come in with me, put this deal together? And that's actually how it happened. And along the way, I ran into guys, Josh Richards, his partner, Animal Ventures, all those guys. We all looked at it together and said, this is cool. So we're partners on it. I think it's great. I mean, and Josh is like some phenom, Gen Z guy that wants to be part of this. And so I said, okay.
Who's better at picking stocks, you or Josh?
We did it with wine the other day, and he shouldn't even be drinking. He's only 19. But I met his parents online. He's a great, cool kid. And Griff, his partner, and Michael Gruen, and all those guys, we have fun together. And I actually introduced him to the crew at CNBC, and I said, you got to get this guy on as the Gen Z guy. Like, you're the crypto guy. I'm the institutional guy. He should be the Gen Z guy.
He's very smart.
I like him. And I said, you want to come into a couple of deals with me? Let's work together and find some stuff. And he's been backed by some heavy hitters. That.
Yeah. Oh, yeah. I know the whole story. I think part of what's so fascinating is you have a lot of different worlds that collide, right? So you've got wine, you've got watches, you've got Shark Tank, you've got commercial real estate, you've got your traditional kind of businesses and investing, venture capital, and then you've also got crypto.
Yeah.
And when all that comes together, is it fair just to say like you're just looking for the best opportunities?
You would be right. But I'm like you. I want to enjoy what I'm doing. I want to get up in the day and say, everything that Nancy's plotted for this day, including being here with you, I want to do it. I don't want to do stuff. I don't have to do anything, but I want to do stuff. And I love working with entrepreneurs. I like finding people and saying, look, don't do that because I've been there before and it's a mistake. Do this, or I can help you here. I can help you here. And let me come along for the ride and let me bring in shareholders that invest beside me and let's do stuff together. I have a community of entrepreneurs that enjoy, I work all day and all night, and I love what I do. And I get up and play the guitar in the middle of the night. I was wailing out in the balcony the other day at like 2 a.m. I know they're pissed at me on the beach, but it was just fun for a couple of minutes.
You just enjoyed it.
I enjoyed it. And so that kind of, it's like live your life as if there won't be another tomorrow and try and make some money because it's expensive.
Can I ask you a somewhat personal question?
Sure.
I've never asked you this before. Do you have like a number in mind that you would eventually say, you know what, I've had my fun, but like I am now rich enough where like I want to walk away? Is there a milestone, or is it literally you're going to die working and you'll just never retire? You'll never stop the game?
I'm not working for money anymore. I don't need anymore. I don't want to lose what I've got. And there's always another watch to buy. And so, the reason I do deals is in my world, you have to do a deal to buy a watch, so that you remember what deal that watch was from, and that's the collection. So I'm always doing deals to buy watches. That's basically the way I look at it. So I got a massive watch collection now, and that community is a very interesting global community. I've met some of the biggest collectors in the world, some of the princes in the Middle East. I'm friends with them now because, we were on WhatsApp talking about different watches. It's a great community to be associated with. And when we find a rare piece, everybody gets excited about it. And it's just, I don't know, it's just interesting. I enjoy it.
So what is it? Why are you doing it? Is it literally just to get a watch?
Yeah, it's a good question.
You enjoy it. I know you well enough at this point now. I know you enjoy this stuff.
I do.
Right?
But I'll tell you why I do it. I tried the other way. I took, on my first big score, the sale of the learning company, it was a $4.2 billion transaction, including the debt. There were 10 of us as founders. We had all started in middle class or, no money. And we'd worked together for, 12 years or something. And then that was a massive liquidity. And I remember when we closed, we were in Cambridge, and we were sitting around a table just like this, 10 of us, having lunch. We ordered in some lunch to talk, and we closed the deal. So now we were funded. And I said to everybody, what's everybody going to do? I mean, like, they bought our company. They don't need us. What are we going to do? And
how old are you at this point?
I think I was 30, maybe
early 30s,
maybe 29.
Okay, all right, so around 30.
Yeah, around 30.
All right,
and I said, I'm going to take some time off. I'm going to go to every beach on earth. I just want to go to every beach on earth, including those ones in Cambodia, Vietnam, Thailand. These incredible beaches.
Yep.
The northern part of Cyprus. All these legendary beaches, and I did. It took me 3 years, and at the end of it, I was bored out of my fucking mind. I mean, I just said, this sucks. It was depressing. This is it. This is all I do is go to beaches and sit there and get drunk. It's just boring. And I got back in the game. I mean, I started doing deals like crazy, and I put my capital to work. I became an investor, not an operator. I made some great scores. I made some catastrophic failures. Mm-hmm. I lost millions. I made millions. And then I got in the groove. And I figured out what is it I'm good at. And, and then the Shark Tank thing came along, and that became a huge platform. Mm-hmm. Then the CNBC thing came along, and it kind of just morphed into this, people know exactly. I'm pretty transparent. Not everybody likes me. They think I tell the truth too much about, business. I think it's good. But anyways, it is what it is at this point. So I'm kind of riding the wave, looking for opportunities.
Shark Tank got renewed?
Yes.
13
just
seasons?
Got announced 13 seasons. I mean, nobody can believe what happened there. Like nobody. I have another show I taped at Telemundo here in Miami, which will be announced this week. I'm excited about it, but the
What's
network wants to keep it a secret till maybe next week. I don't know when. But Telemundo is I'll tell you, I'd never been to that studio before. It is the most modern studio in the world. It's completely digital. The whole thing is wired digitally. Even the signs are all digital. They can change anything, temperature in one part of the room. It's massive. When J-Lo rehearsed for her Super Bowl act,
mm-hmm.
she did it in a soundstage there, the size of a football field.
Wow.
And I was taping right beside that when I went and looked at it. And I went, this place has its own weather zone. It's so big. The ceilings were so high.
Yeah,
and it's just north of the airport. It's a massive facility.
Yeah. Shark Tank, 13th season versus the first time you went on. Does it still just as exciting? Is it still just as fun, or is it different now?
Well, a few things have changed. First of all, venture capitalists have now figured out that they get to 100 million eyeballs for free. So you've got all of these VC-backed deals, like with 50 million valuations, 100 million valuations. And my attitude about that is I don't give a shit what your valuation is. If you want me as an investor, I'm carving my own deal. Mm-hmm. And you don't have to take it, but it's going to be, that makes me get a special position because I add way more value than your VC does. Nobody knows who your venture capitalist is. Mm-hmm. They don't know the brand, but who cares? They're all the same. And they all want preference shares and all this stuff. And I'm not saying they're bad people. I love venture capitalists, but I don't need them. I can raise my own money for my firms in my own way. And I don't like preference shares. I don't like shares that are sitting above me and have rights I don't have. That just pisses me off. So I don't use that stuff. So we get a lot of those companies now, Pomp. We get all these companies that say, if only we could get on Shark Tank, right? So they have to weed a lot of those out because they're just gold diggers. Then we get some really interesting stuff on direct to consumer. Mm-hmm. Like there's a trend emerging in America. Let's just take the food group, for example. Low sodium, low sugar, low cal, totally healthy, like really eclectic verticals where people, that really care about health will make a different kind of coffee or a different kind of peanut butter. Mm-hmm. And what I find, what I see happen on those deals is when they hit the airwaves, you sell $5 million worth of it in 1 hour.
Yeah.
A lot of people are into that health thing. So that's a big change, because in the old days, we just have pizza sauce and, just hot sauce and more sauce. And, now it's sauce with no sodium, totally fresh, no preservatives, all that kind of stuff. And things like that. And really, they come in knowing what shark they want. They know us so well now. Mm-hmm. I want to deal with, Damon in clothing, or, I want to do a financial thing with Kevin, or whatever it is. And anything in the wedding industry, that's me. I love love.
I want to leave with the best story from Shark Tank that you've ever told me, which is your best investment, which is the potatoes.
Yes.
Tell us the story and what happened since you did this deal.
Yeah. So it's called Potato Parcel. And it's a company that...
I'm imagining Damon being here right now and just laughing his head off.
He did. This guy comes on and he says, I take a potato, a real potato, and you send me your image digitally, and I imprint your face on the potato. And then I ship it to somebody for you in the U.S. mail. And then they put the potato with little toothpicks in a little thing of water, and the potato grows right through your face. And it takes months to do it, and crazy stuff happens, right? I said, that's really, really stupid. I mean, that is incredibly stupid, and what a stupid business this is. And he said, well, what is it you care about in business? Sales, right? And I said, of course, but nobody would buy that crap. And they said, oh yeah, look at this. He had like 30% growth a month. And he was really good at SEO. He was really good on digital, really good on social. He was telling the story. And I was sitting there thinking, I'm never going to invest in this thing. It's so stupid. And I said to him, well, how about I get a chunk of equity, but I want a royalty. I want to.
But hold on, you'd already seen one example of something stupid make money, right? That's an important part of the story.
Well, it's true. I want to draw a cat for you.
Yes.
Which was the stupidest, most stupid thing I'd ever seen.
Which one's dumber, Potato Head or I want to draw a cat?
Draw a cat for you is incredibly stupid. You pay a guy to draw a cat, and then he mails it to you. And Cuban invested in that and made a fortune. I thought that is the stupidest.
Because he had the song, right? He had some stupid little song.
He danced like a cat. And it was like, so I thought it's such a piece of trash. What a stupid idea. And it did a ton. Yeah. And really, really high margins, because this guy would just sit down and draw a cat, and he had other cat drawers. It's so dumb. So when I saw the Potato Parcel, I said, there's room in my portfolio for a Potato Parcel company. Now, remember on Shark Tank, you calculate, you're putting out capital. So you really want the internal rate of return on that capital. Mm-hmm. In really nascent venture investing, it's return of capital, not return on capital you care about. That thing aired, and I got my money back in like 45 minutes.
Really?
And so it has the highest return ever for me in a shark. Everything, because I had $1 royalty on every potato, and I can't remember what percentage. I forget what I own of the company. But that thing has just spun cash. Mm-hmm. And I got calls from CEOs of major corporations saying, listen, I want to buy 1,500 potatoes for my sales force globally and ship them, and I want a discount. And I say, no way. There's no discount. I'm the only kid in town for potatoes.
And you have monopoly on faces.
Nobody else puts a face on a potato the way we can. Plus our new gift box, Pomp. We get a premium gift box with a beautiful little label on it and a gift package with your face in the potato, and it comes to your door and you're just thrilled to death. We are pumping those out by the hundreds of thousands, and there's no discount. I mean, this is the El Supremo potato. And so it just shows you with the right social media platform what you can do. Mm-hmm. And these are real entrepreneurs. It's a real business. It's not a bullshit business. So it's made money. It bought a watch, I'll tell you that.
I'm proud of you, because 3 years ago when I went on the CNBC set and you hit me with, you were forbidden. You're not at 50% yet, but you're at 3, maybe 5, maybe you can get you to 10. You're headed in the right direction.
Yeah, we are, and I think we could eventually we may abandon our gold position, which is significant. The way we own gold is we own the GLD for rebalancing. Even though it's more expensive, it's very liquid. But we also store gold and pay for the storage. So it costs us money to hold an asset that has no yield. And that's the argument that the committee makes about the gold position we've got, saying, think about this. It's reversed interest. If gold stays flat, it costs us to own it. Why don't we just allocate 200 basis points of the gold portfolio, just sell down our GLDs, go to fiat, and then just buy in,
Bitcoin.
Yeah, or whatever. You don't have to just buy Bitcoin, but buy a portfolio of different crypto assets, and then do the contracts. And I'm opening up to it because proof is in the pudding. And so it's just the weird thing is that, and you said it earlier, you don't want to go back to fiat, and so you're saying to yourself, I'm going to live with more and more vol, because you are, as you build up that asset, but you feel a lot better about getting yield off it. All of a sudden it's working for you while you're sleeping, as opposed to most people think they just own Bitcoin in their wallet, pay their ridiculous fees to their wallet, which they don't have to. I mean, people are going to figure this stuff out. They're going to start to see DeFi can be a lot cheaper, less friction. You can still be compliant. I don't want to break any laws. I want to be compliant because I got a lot of other assets. And that's why I want this version of what we're doing in Vancouver with the DeFi Ventures guys. I want that to be compliant to the point where I just press a button and get my tax return.
That's how it works.
Yeah, I mean, it can. So I'm very excited. I mean, obviously, you've been riding the wave a lot longer than I have, but I'm caught up pretty damn fast.
You're coming along. We just got to get you to stop. The other thing you said one time was crypto garbage. Not garbage, which is a little bit above garbage, I think.
No, but I liked it, and it's now legendary out there, and everybody nails me to the wall on that thing.
They say it?
And they say, you're the guy that called it garbage. I'm going to let you in on a little secret about the TV commercials that you see on Hulu, Roku, Sling TV, and other popular streaming services. Did you know that these commercials are completely different for every household? And these ads can be targeted like you can't believe. With my commercials, I can target based on a user's purchase behavior, their household income, their job title, their location. I can even target based on if you visited one of my websites or made a specific purchase. These options are basically endless. It's probably starting to make a lot of sense why you're seeing a lot of these commercials these days, right? Unfortunately, because of the huge cost of TV advertising, most small and medium-sized businesses have never been able to advertise in this media. These ads haven't even been an option until now. A company called C² Social has solved this. C² Social is a company I'm partnering with because of their extraordinary connected TV capabilities. And best of all, they're the only ones in the business who have no minimum spend requirements. If you aren't running these types of ads, you're crazy. You've got to meet these guys. I love innovation. I love entrepreneurs, and I love tools that help medium and small business. Check them out. C² Social. Fantastic.
Hey, Kevin. So you recently said on Coindesk TV that institutions' ESG committees are, in fact, taking a harder look at crypto assets specifically and demanding better compliance. And of course, that conversation's only heated up since then, especially around Bitcoin. So we'd love to know, what's your take on the current view in ESG in terms of the sector?
You know, this is all a good thing, and I'll tell you why. It shows you that the institutional allocation committees and sovereign funds and pension plans and large institutions who really have been ignoring crypto for quite a long time. I know we're all very excited about it, but the truth is that less than 1% of institutions globally actually carry it as an asset class at all. So we're just at the nascent beginning of this interest. And as you know, and it's been discussed quite a bit in the last few weeks, most of these institutions have both ethics and sustainability committees that filter offerings before they're allocated on the investment committee. And they're doing the same thing with every asset. They're not just singling out crypto or Bitcoin or Ether. It doesn't matter. They're doing it with every asset. And so the fact that they're going through this process, I consider a very positive sign. And now we have to find a voice. The industry that mines Bitcoin specifically needs to find a voice to talk about the things they do that actually help build sustainability into energy. I mean, obviously when you're mining coin, you want the lowest cost of energy you can get, and that makes you invest capital in finding it and finding sustainable ways to have it so that you can mine in the most profitable way you can. The profit motivation of mining Bitcoin is actually helping sustainability, but that voice is lost in the criticism right now, particularly after New York threatens to put that 3-year moratorium on Bitcoin mining, and then you heard from Elon, and then all the institutions chimed in. We have no voice. Miners have no voice. That's the problem currently.
So Kevin, so a voice is part of this, but presumably there's some very specific things that, whether it's miners or developers of digital assets in particular, can do to try to ensure that they do meet these demands of ESG investment committees. What kind of things should they be focused on?
Well, if you're in Kazakhstan burning coal to make Bitcoin, not so good. That's obvious. Obviously, every sustainable committee is going to say, no, we don't want that. We've got to find a different way to do it. And I think a lot of the energy now, and there's more and more of this conversation and dialogue occurring, is to go to the institution itself and say, I'm a Bitcoin miner. I have a sustainability mandate. I am in sync with you. I am going to mine my coin sustainably. Here's my energy source. Here's how I do it. Here's where I mine it. And you can buy my shares if I'm public, or I'm private. You can invest in me, and I will hold that coin on my balance sheet for you. You will know its provenance. You will know it was mined ethically. You will know it was mined sustainably. And we together can build this business together. That's after you as an institution have decided to put 3 or 5 or 6% into Bitcoin in the first place. And there's a lot of excitement about Bitcoin. There's no question. It's the one that most institutions are talking about, even though as a community, the crypto community has lots of other opportunities. Right now, the institutions are interested in being exposed to the volatility of Bitcoin, but they've got to resolve this problem. And I think there's some very interesting research going on now, and indeed investments, and I'm part of it, to try and find a way to tag a Bitcoin, a coin itself, that to prove that it has a wrapper around it, that it came from a sustainable miner. And this sounds out there, but it's being worked on right now because that's what institutions want. And when that dam gets released, the amount of capital that will come into Bitcoin, it'll be the reason it goes to 100,000, 200,000, and all the dreaming that's been going on around price appreciation. That's not going to happen until institutions start to buy it. So everybody's got to wake up and realize there's demand, but it's got to be done around ESG concerns.
So to your point, there definitely are some really exciting projects and data and high quality research on these topics. But the reality is, at least right now, the debate around Bitcoin's carbon footprint is really it's happening in these overly simplistic talking points on both sides. And so some of us really believe there's a critical need for more nuanced, sophisticated dialogue on what's possible and what's not possible. What do you think can be done to help shift the narrative?
Well, the narrative is going to be shifted by the market itself. I mean, obviously, there's a lot of miscommunication and a lot of mistruths about it. The fact that there are miners in China and other places in the world, Iran, Iraq, Kazakhstan, etc., that are not really concerned about ESG issues because they've never had to deal with it, but they're still profitable miners. New mining operations, new investments in mining are very, very, let's call it, hip to the issue. They get it, and particularly if they're going after institutional capital. There's many deals in the market right now that are trying to raise $100, $200, $300 million to build out facilities in a sustainable fashion. So, obviously this is a very new issue. It's probably only 4 months old, but it's becoming a big cry from those institutional investors. And the community itself, there's many different views, there's no question about it, but this issue is not going away, that's for sure. And if you want to unlock, as I said earlier, the power of the institutional dollar, the billions and billions of dollars that would be coming into Bitcoin alone, if it was in a way that would be part of the mandate for sustainability and ethics, that's what really unlocks the power. So everybody that owns Bitcoin today, regardless of how it was mined, is incentivized to solve this problem for one reason alone: price appreciation. This is not brain surgery. Everybody can figure this out, price and demand. And to ignore it and to say, it doesn't matter, is a huge mistake. And I think over time, particularly over the next 24 months as the new deals, every deal I look at now to invest in a miner, just let's stay in the mining sector for a moment, it's the number one question I have. How are you dealing with the ESG issue? What is your plan to show institutions that may want to own your stock down the road just to have exposure to your coin? What are you doing about it? Are you taking off flared gas? Are you new a hydro facility for hydroelectric? Are you going to new geographies where there's very, very sustainable low-cost power? What's the plan? And I'm glad we're having the conversation. I'm glad you're focusing on it because it is a very big deal.
So it sounds like you think this is very demand side driven. Do you think that there's alignment in these investors? Do you think that they agree on what it is they want to see?
Well, it goes from a baseline of don't burn coal, don't do harm, to let's find the most profitable miner that has found a way to get the lowest cost energy contract. I mean, there's a lot of differences between all of these different offerings. But this issue, we weren't even talking about as a crypto community just 11 months ago. It wasn't on anybody's radar screen. And then all of a sudden you started to hear it, no matter what direction it came from. There's all kinds of people talking about it. But I think it's not a bad thing at all. The challenge with a decentralized asset like Bitcoin is there's no central voice. There are thousands of participants, but there's no committee. There's no, for lack of a better word, lobby group that says, no, these are the actual stats. This is the real information. There's lots of different tangents, but it's an industry that's so nascent, so new, that it hasn't found a way to say, wait a second, we're being accused of all these incorrect facts. We're going to fix this. We're going to put out real information. In the end, the truth is what matters, particularly if you're an institutional investor and you want to know the facts. But I can guarantee you at the institutional level right now, whether it's sovereign or domestic pension or anybody else around the world, they are listening to what government's saying. Norway just pulled its tax credits because they've got a lot of concern at the popular level. The population, the people that live there are worried about it. You've heard the same concerns out of other geographies saying, why are we burning all this power to make a currency? But there's no voice. There's nobody pushing back. And I think this is going to change over time. Either the CEOs of the large mining operations will come together and say, here are the facts about what we do, or the crypto community will somehow take from a decentralized view to a central one to address government's concerns at the state level, at the federal level, and at the international level as well. Bitcoin as an asset is here to stay, and now it's got to get in sync with what institutions want before they buy it. If you like that video, wait till you see my next one. Don't forget to click right over here and subscribe.